Bookkeeping is a crucial aspect of accounting that involves recording, organizing, and maintaining financial transactions of a business. Here's a detailed overview. After making transactions, needs to record these transactions, and there is a way to record business transaction, that is bookkeeping, which is an art of recording the business transaction. Transactions are initially recorded in journals, such as the sales journal, purchase journal, and cash receipts journal. Bookkeeping follows the double entry system, where every transaction has equal and opposite effects on at least two accounts. Each transaction involves a debit entry and a corresponding credit entry to ensure the accounting equation, assets equals liabilities plus equity, remains balanced. Transactions are then posted to individual accounts in ledgers, like the general ledger, which contains a separate page for each account. Ledgers provide a detailed record of each account's activity. Bookkeepers create a trial balance to ensure that debits and credits are equal. It lists all accounts and their balances to detect any errors before financial statements are prepared. In essence, bookkeeping is the systematic recording and organization of financial data, forming the basis for accurate financial reporting and informed decision-making within a business.